Hi, this is Michael Jones, Chairman and Chief Executive Officer of Caravel Concepts. Welcome to Market Insights, our weekly commentary on financial markets. Let's get started. So this week, we're going to cover something that's not exactly related to financial markets, but that has a big impact on whether your stock portfolio goes up or down. And that is political polls. Political polls can be a little confusing because the nightly news is filled with the latest polling results. And then there seems to be this message of, but you really can't trust them. Now, I want to talk a little bit about what makes polling so difficult and what the current polling data may mean for the coming election and, most importantly, the market's reaction to the coming election. So let me start off with a disclaimer. I am by no means an expert on political polling. However, modern polling is a lot about mathematically modeling human behavior, and I got a lot of experience in that. And that experience has taught me one thing, and that is that modeling human behavior is really tough because people every now and then change what they do. And that is the challenge in creating a good prediction through polling of what will happen in an election. Back in 2016, the polls suggested that Hillary Clinton would win. Not an overwhelming victory, but that Hillary Clinton should win. And that's obviously not what happened. And the problem is that for the first time in polling history, people divided how they voted based upon whether or not they'd gone to college. That had never happened before. And if you're creating a mathematical model of human behavior, you use history to build that model. If people do something different, your model's wrong. And that's essentially what happened in 2016. Now, in 2020, the one thing I am pretty confident of is you will not have to worry about that same mistake being made. Mathematical modelers get really upset when they are majorly wrong, and they revise their models accordingly. So there'll be good modeling of this division between people based upon whether they went to college or not. However, that doesn't mean that things can't change in the 2020 election. The initial results from early voting suggests that this could be a record turnout for the last 100 years. Now, we don't know that for sure because, hey, people could be showing up to vote early because they don't want to stand in line in a time of a pandemic on November 3rd. They'd rather stand in line on October 23rd because they're having to stand in line on these early voting places too. But let's for the moment assume that these record numbers of early voting are indicative that we're going to have a really, really big turnout. All right, that is a change in human behavior. And that means that the polling models may not be right. And it's particularly tricky because there are three groups of people who tend to be eligible to vote, but they don't vote. And those people are the young, voters under 30, ethnic minorities, and people without a college degree. Now, think about the voting patterns of those three demographic groups. They're very, very different. So if we do have record turnout, then the polling people are going to have to guess which one of those three groups, how much of those three groups are going to be the ones that show up to vote. There's no way to do that. So I'm sure what they're doing instead is they're just assuming that the voting patterns of 2016 and 2018 will be repeated in 2020. If a whole lot of white folks that without a high school degree who typically don't vote, if they're the ones that show up, those models are going to be wrong. If a whole bunch of people under 30 who've never voted before, if they're the ones that show up, those models are going to be wrong. And those are the issues that polling people are having to confront in this election cycle. Now, what does that mean to financial markets? Well, financial markets hate to be surprised by anything. but they particularly hate to be surprised by election results. And if you're all prepared for one thing to happen and something different occurs, that can create a problem for financial markets. Now, in this particular instance, the polling data is suggesting that there could be a pretty big win by former Vice President Biden. And financial markets may be pricing that expectation in, or they may be a little skittish based upon all the issues that pollings have had over the last 4 years. But in my opinion, the way that polls can create a problem for financial markets is if financial markets are convinced that there will be a definitive conclusion on November 3rd. That when we all go to bed on November 3rd after biting our fingernails down to the quick, depending upon which side you're going for, it's still going to be a stressful night. When we get to bed that night, if we know who the president is, then financial markets are probably going to be happy. On the other hand, what will be the surprise, in my opinion, for financial markets is if, despite the polling data, this is a very close election and mail-in ballots and so forth will have to be counted up to really know who is the president. Or if it's close enough that President Trump feels like he is entitled to pursue legal action. These will be the kinds of outcomes that, because the polls are pretty strong in one direction, markets may not be prepared for there to be an extended period of financial uncertainty. So we need to be prepared for that and not panic if we do have that period of political uncertainty. Because ultimately, in our opinion, come the new administration or the continuation of the old administration, come the new Congress, the first item on the agenda is going to be another stimulus bill. If the Republicans take control, that stimulus bill will be under $1 trillion. If Democrats take control, it'll be $2 trillion. But either way, something close to $1 trillion is going to be printed and injected into financial markets. And after we get through all the uncertainty, after we get through all the political folderol, that stimulus and the Federal Reserve's printing the money to finance it will be what's ultimately most important for financial markets. Thanks for joining us for Market Insights. We hope you found it informative. If you'd like to see more of our research, you can find it at our website, caravelconcepts.com, or you can subscribe to our YouTube channel below. Thanks.